Natural gas prices have fallen over the last month in what has been a fairly surprising move to many of the markets. So we're going to discuss in this video some of the fundamental factors driving natural gas prices, and of course take a look at the charts to see if it can tell us potentially where natural gas might go over the course of the final month of 2023. To figure out where we're potentially going, we have to know where we've been, and that is especially true for the natural gas market, which really did go on a surge over the last couple of months on the basis of a few things. Of course, there were concerns about the level of demand required, especially in Europe, but other parts of the global economy as well, going into the high demand period of winter. But there were the ongoing geopolitical risks that not only were stemming from Ukraine-Russia war, although they have diminished over the course of the last couple of years, especially as Europe has diversified its supply chains, but also because of the energy disruptions that were looking likely as a consequence of the Israel-Hamas war. Now, of course, we saw the impact on oil prices and some other key energy commodities in particular, as some feared disruptions to supply chains as well as key energy infrastructure. But there was also the shutting down by Israel of a key natural gas plant that it did so on the basis of trying to avoid a potential attack on that infrastructure, effectively removing the incentive from adversaries in the region to try and target gas supply. The other factor too, of course, was that Israel was redirecting natural gas back into its domestic economy, so curbing its exports, however modest on a global scale, really to try and prepare for potential energy disruptions as a consequence of conflict in the region. So that supported a price rise all the way up to around $3.50, and we'll look at that in the charts in just a moment's time. But ever since then, we've seen a fairly rapid decline in energy prices, and the factors for that we'll call them threefold. First, there are general concerns about the demand outlook as a result of weakening economic growth around the world, and by extension, a marginal drop in the level of demand going forward for natural gas. There's also the element too that we're looking at a very, very well-supplied European market. In fact, storage levels are effectively at capacity and higher than they've been at any time in the last 5 years or so. That is despite, of course, Europe looking to diversify its supply chains away from Russia to ensure greater energy security, in particular importing more gas from the United States and from places like Norway as well. Finally, and this has been the development over the last few days, is that despite the fact that there has been some cold weather in parts of Europe, there are forecasts for a much milder winter this year in the Northern Hemisphere, which of course will diminish the need for natural gas as a way, of course, to heat homes and other reasons. So there is this perception at the moment that we could be heading for something of an oversupply in the natural gas market, at least in the very short term, and that is what is putting downward pressure on prices. So this is how we're setting up from a technical standpoint for natural gas, and we can see some interesting signals starting to emerge. First and foremost, we had those extremely overbought conditions prevailing at the start of October, and price effectively turning lower since then, and now approaching on the daily charts technically oversold territory, although we're not below that 30 level in the RSI yet to indicate as much. But perhaps more crucially, we have seen price pull back to test a upward sloping trend line and eventually break it, suggesting that the uptrend that we've seen prevail for most of this year for natural gas is breaking down. And we've seen price now revert to the 200-day moving average, which is acting as some level of support around $2.76. So if we see this level hold, maybe there's a chance for a little bit of a reversion here. Of course, we're seeing downside momentum slow. However, if that breaks, it does suggest that maybe a push towards that sort of $2.50 mark could be on the cards. That is the noteworthy level there you can see as a level of support and resistance in the past. Now, in terms of perhaps the bullish arguments here for natural gas, we can see that the price is carving out a downward sloping wedge pattern or a descending wedge pattern, which is typically indicative of a market that is poised to reverse and push to the upside. That is at the moment looking at as though it might be at risk slightly, because the lower bound of that structure is looking as though it could potentially be breached But of course, this is more art than science, so it might be the case that we have a false break there and we do continue to move to the upside. But as you can see, generally speaking, things are looking fairly bearish for the natural gas price, with that 200-day moving average often considered that key level between dividing a bullish market and a bearish market, really hanging in the balance at the moment. So there you have it. Both the technicals and the fundamentals at the moment for natural gas are looking relatively bearish. So a few factors to look at as we move into the end of 2023. Of course, it's the demand outlook and whether we continue to see softening in the global economy, coupled with the fact that maybe with a reasonably mild winter on the cards, there won't be as such high demand for natural gas. There will be the supply side issues too, and there's an extension of broader energy markets there in the looming oversupply expected in some key energy markets, but especially in natural gas, with storage levels in Europe in particular as high as they are, as high as they've been over the last 5 years or so. And then, as always, we'll be staying cognizant of potential shocks from geopolitical risks in the Middle East, in Ukraine, perhaps some other part of the world that could disrupt energy supply. But that could be argued as being a bit of a grey swan. Otherwise, all things being equal for the time being, the charts suggest that maybe things are going to remain fairly bearish for natural gas. However, as we noted, that 200-day moving average, a crucial level, we'll be keeping an eye on how that one holds up.